Welcome to Credit Union Joe is Disrupted with Josh. Today we're joined by Ben Rempe, Chief Operating Officer at LenderClose. Ben, how we doing?
I'm doing awesome, Joe. How about you?
Doing great. Let's learn 3 things about you. Lightning round. Favorite food?
Ooh, favorite food. Okay. How about a 3-pound Tomahawk Ribeye, little Lowry seasoning salt, throw it on the grill, low heat, get it up to a nice 120 in the center, crank the heat, sear both sides, let it rest, cut into it. Beautiful.
That thing's got the big bone, right? That's the big bone hanging off the tomahawk. You just hold on to the bone and you eat it from there?
Yes, exactly. You got.
All I see is Fred Flintstone. That's what I'm thinking of right now.
That's about right, man.
Perfect. Favorite movie?
Okay, favorite movie. Okay, normally I would say Star Wars, except I saw a trailer for the new Top Gun movie. Have you guys seen this yet?
Yes.
Well, I'm feeling the need.
Need for
the
speed.
need for speed.
Every time you hear love it. If you weren't helping make the credit union difference, what would you be doing for a living?
Oh, man. So my whole life, all I wanted to do was be a professional baseball player. That's what I thought I was going to do. And I chased that for a minute, and then it turned out I sucked at baseball. So I still miss that. I still miss sports. One of my buddies is a high school football coach, and I think that would be a really fun thing to do. So, and it's kind of like sales and, lending. It's all coaching and mentoring and holding people accountable. So
you have to deal with the parents, though. That's the downfall of that piece. I don't know, but I hate that too. I thought I play in the NBA would have been great, but it sucks that the prerequisite is skill.
I know. You actually have to be good at the sport to play it professionally.
Wow, those are great questions, Joe. Do you have any real questions? That'll be fun. To
let's see. We're gonna start easy. So Ben, you've been around a lot of credit unions. What do you really think makes a credit union successful?
Well, I think there's a couple things that they just have just naturally that make credit unions. I think the first thing is a lot of times you have this generational membership where, like my dad, shortly after I was born, walked into the IBM Employees Credit Union. And the next thing you know, I have kids and they still have accounts at the same place that I have. We've had it for a whole life. And as long as they just make things easy and allow us to keep doing our thing, we'll stay there. So there's this nice generational aspect that credit unions have that is kind of a family thing. The second thing is the localness of it. So, maybe your kid's teacher, their husband works at a credit union, or maybe you're sitting at church and next to you is the chairman of the board of a large credit union. These are local people who are your neighbors and your friends. And so that's something that I don't think you can replicate. Like I want to do business with those people and keep it local. So those are the 2 advantages I think credit unions just start with. And then the ones that are exceptional, they hold themselves accountable to what they're great at. They hold their teams accountable to delivering on their whatever their value proposition is, and they just lean into who they are. And I think that's consistent across the really successful ones. They've leaned into who they are and they embrace what they are there to do as a credit union.
Hey, you know what? Which is a great segue. Since you have been around a lot of credit unions, the credit unions that suck, the sucky credit unions.
Sure.
What makes them sucky?
Well, I think that there's a lot of reasons for that, Josh, and I don't want to dive it. We'll spend 30 minutes going after it if we wanted to, but I think there is a mentality that we've always done it this way, and so we're just never going to change. And we believe that, hey, service is there's popcorn in the lobby and come sit and have a cup of coffee. That's not service, Josh. That's not what it is. And until we really break that mold of the way it always has been, they'll never move on to what their future is. And they're way behind credit unions that are moving forward and leaning into who they are.
I think you're so spot on. We've always done it that way, right? It's time to make the donuts, get up in the morning, let's go make the donuts. Sometimes I wonder though, if it's not a bit of protectionism, as you see leadership, especially some CEOs of credit unions, that basically it's like, why make a change? Because I just need to ride this thing out to wherever my golden years are going to take me, which is unfortunate. You don't have to answer that one. It's an opinion. I just think that's my opinion, that you see some of that too, that it's always the way it's been. It's funny. and sorry not to digress, but thanks, Joe, for letting me. We didn't want to hear you talk anyway. But
Probably not.
so I always think of the organization, any organization, as a person, right? Personify the person, which isn't uncommon. And then I think of what age would that person be, right? And I was telling somebody the other day, I go, once you define what age that company is or that business is as a person, they can never get older. They can't age out with the leadership or even the membership in a credit union capacity. They have to stay the same age, right? So like if an organization's 35 years old, you always got to be cognizant to look through some of your decision making, especially culturally or who you are, as if you're a 35-year-old. You know what I mean? So I'm with you 100% on that. Joe, do you have a good question?
I was trying. I mean, it's kind of relevant. I mean, because we're talking about growth and how credit unions can battle the big banks but they don't have the technology budgets of these big banks. So how do you think credit unions can compete with technology investments and growing and changing with the times, but balance that with their comparatively smaller budgets?
Well, first of all, that sounds like an excuse, not a reason. Secondly, we talk about this a lot internally. We say we're kind of on the edge of this 1994 moment. Like, okay, wait a minute. Well, what's that mean? What happened in 1994? Well, first of all, Nebraska was on the verge of starting to win a whole bunch of national championships in football. We're probably on the verge of that again. However, the real relevant piece of the conversation is that in 1994, there were three companies. You've heard of all of them. One is Sears, one is Walmart, and one was Amazon. And do you guys have any idea what was significant that happened in 1994?
Internet related.
So probably the internet?
No, actually the exact opposite. Here's what happened in 1994. Sears stopped sending the catalog. Sears had been sending the catalog since the 1800s. At one point in time, I could buy a whole house on the Sears catalog, and it would show up on a train. You take the logs off and you'd put it together.
Do you ever circle the crap for Christmas? Like your parents give you the Sears catalog, you just circle the crap that you might want?
I loved it. That was the best. You dog tag the ears, you check it all off, you circle it. So what was Sears selling, Josh? What were they selling?
What an experience, feelings, right?
I'm home, I get this thing, and I'm elated to page through it and find the things that I want. They stopped doing that. And you know what they embraced? The softer side of Sears.
Oh,
and
sure.
Every end cap in every mall across the United States. And they went from being one of the largest companies in the world to delisted on the New York Stock Exchange, and probably, I don't even know if they're still around at all. But let's think about this. Sears was catalog. We didn't have the internet back there. This thing just showed up and like, oh yeah, I want this, I want this, I want this. What do you guys do with Amazon? I've been spending so much money at Amazon lately because it's like, I open up my phone, I need something. Yep. Hey, I think I need a new speaker outside. Yep, I want that. Oh, the girls' birthdays are coming up. Maybe we should do some. It's all right here. It's right on my phone. So Sears was Amazon before Amazon was Amazon. And Amazon just filled the gap. This company that was just selling books filled the need. It used to be I'd open the catalog and shop. Now I open up my computer and shop. Sears had the marketing lists. They had the distribution network. They had all the shipping. They had the shipping contracts so they could get anything anywhere, but they just gave it up to go retail. They could have invested the money and they didn't. They could have been Amazon, but they decided not to be. And the moment right now is it doesn't matter if you're big or small. Are you going to embrace technology? Or are you going to just run away from it and say, no, this is how we're going to be? Because it's the way, and in that case, it wasn't even the way it always was. It was, man, retail's blowing up. We just want to be retail.
To that point, your great point is what I hear you saying too, is that it's hard to get some credit unions to make those investments at times. And what's crazier is I think it seems like, or perhaps let me submit this idea, they don't even consider them investments. It's just a sunk cost. So then here's the question. If you're a credit union that is making any money, right, but you're a not-for-profit financial cooperative, right,
Sure.
What are you making the money for if you're not investing it?
Well, Josh, there's a CD yield that I might be able to get 85 basis points that I could just plop it in there and hope to make some, guaranteed return. Or, I could take a $500,000 and use that as capital to start a CUSO. Or I could take $1 million and invest in a CUSO. Or I could try to partner with companies that are relevant to me. And I'm not talking about big tech. There are startups everywhere that need capital. And they are the technology companies that if they don't get the capital, they might have the coolest widget in the world. But if they don't have the ability to make it go, it won't happen. We need those types of companies. We need an infrastructure where we can reach out and partner with tech or create it on our own. You guys have created stuff on your own. You don't have budget for it. You just do it.
Do you not find it incredibly ironic though? Because what I was going to say is, yeah, Ben, that's great, but what if we invest this money? What if it fails? And I think, because you hear that kind of stuff, right? What if it doesn't work? And that's what people are thinking, which is really ironic when you consider that a financial institution is in the risk business.
Don't we forget that sometimes, that we are in the minute that you make a loan, even the second you take a deposit, you're in the risk business now.
Yeah, absolutely.
Yeah.
Joe, what do you got? You got anything to add? What are you doing?
No, I mean, I was just trying to figure out how to spell risk. I was using and counting, and I only have 10 fingers. No, but well, speaking of risk, let's talk about operational efficiency, because we've kind of skipped forward a little bit.
Okay.
Where do you see credit unions stumble in terms of their operational efficiency? If they're heavily risked, they're not investing in technology, where we're just stumbling all over the place. What's it look like?
So first of all, there are a percentage of credit unions that do operations and risk really, really well. And there are some that have made investments into technology that really study the way that they do things, and they do a great job. But your average credit union is not that way. And they struggle with efficiency and all over the place. I mean, we talk to billion-dollar credit unions that are still using Excel spreadsheets for loan decisioning or tracking things, and it's ridiculous. It's not safe, it's not efficient, and they shouldn't be doing it. But the thing that I really think about, Joe, we look at numbers all day. We're in the Callahan stuff, just looking at percentages. Do you guys know what percentage of what the average credit union, what percentage of their members have a real estate loan with the credit union?
Oh, it's not going to be exceptionally high.
No. 20, 15%?
4.
And are you talking about even ones that they'd be holding them, or if they're selling them as well?
Both. It's one. It's all in one bucket.
Yeah.
4%. 4% of the average credit union member, their members have a real estate loan.
Do you think it's because they're not sure how to manage the risk of a longer term asset?
I think it's risk related, 100%, which is insane, because you can walk into a credit union and get a $15,000 unsecured loan and get the cash right now. But if I say, well, hold on, I actually want to use my home as collateral. Oh, well, now it's 45 days for $15,000 that you'll give me right now, and I'll pledge my house. But now I got to wait 45 days? Okay, never mind. We have this misaligned idea of what risk is. Another percentage that's interesting is only 17% of credit union members have a credit card with the credit union. 24% have a car loan. 24%. And if you just add those up and you say, okay, there's no overlap here, that's what, less than 50% of the people who are members have a loan? Whoa. Now, why? Why?
Why? What do you mean? Because they're not in a sales business, right? Sales is a dirty word, right?
It's funny. They say sales is a 4-letter word, but actually sales is a 5-letter word.
Right. But you're saying also the systems that go with it, right?
Yeah, the systems. One of the things that we get is, well, shoot, we do auto loans all day. They're easy, you just click, done. Well, home equity lending is easy too. If you're not using tools and technology, you're doing it wrong, man. It can be just as easy as doing a car loan. Credit card is the easiest thing you can do. But if I go apply for a credit card at the credit union, I got to wait 7 to 10 business days before the card plastic shows up. But I go apply it at Apple or at American Express. I apply at 9. I get my card loaded on my phone at 9:30, and I go to Panera Bread at 11 and buy my salad. Like,
Yeah.
why can't I do this?
Yeah.
What's stopping us?
Joe,
Well,
Joe, were you
painted
Joe,
the doom and gloom
Joe,
picture. No, Josh.
Are you saying?
You painted the doom and gloom picture, but let's talk disruption. What's the positive spin on this? There's got to be an answer for it.
Oh, well, there are answers all over the place, and I am encouraged. I mean, we're CUSO guys, and we have credit unions who invest in us, so we do a lot with other CUSOs, and I see the things that are out there. We're also pretty active in the little tech scene in our community. There are all sorts of people who are doing stuff that are really amazing. But as an industry, generally we see startup as scary, risky. We see new partner and they're a fintech and we go, ooh, that's going to be a compliance nightmare. Oh boy. Or, oh geez, I really worry about security protocols. Man, that's scary. Well, it's scary because we don't know about it. It's scary because we don't understand it. It's scary because we just kind of shun it away versus going and asking questions. And it turns out all of those scary things about security, a good fintech's already thought about it and they've got it mitigated. All of the compliance thing, it's already been thought about and it's already been mitigated. And if it hasn't been thought about, that fintech is going to go, holy smokes, I never thought of that before. Thank you for sharing your input. We're actually going to put that into the next release of our software. So like, we got to embrace this stuff, man. It's coming. It's out there. The future is now. Are we going to embrace it or are we just going to watch as it passes us by?
Hey, Joe, can I ask an adult question?
Please.
Thank you. So taking all that into consideration, and you were talking about numbers and statistics, which is kind of credit unions can usually understand numbers, right? They should.
Right.
Do you think, and not to put words in your mouth, do you think a fair first step for credit unions to really look at where their investments in tech could be, maybe is to actually look at the average lines or high performing credit unions and then look at their numbers and see the places where they're trending away from others and have dialogue around that. In other words, if a high performing credit union has 30% or 40% of their balance sheet made up of mortgage loans, when you were talking about 4%, and if I'm a credit union that only has 4%, I should be able to have conversations about that difference, right? And say, hey, why are we trending away? Or if new technology is going this way and people are adding this technology and you're not, you should at least be able to understand why you're not, right? So I guess that's what I'm thinking of as a step one. What would be step one in your mind for a credit union saying, yeah, we know we need to do more with tech to help our organization grow. There's just so much out there. Where do we start?
Man, that we could take this and I mean, we could spin this off for an hour, Josh.
Yeah.
I think to me, step one always starts with the individual. And step one is I got to put my shield and sword away. And I really have to allow myself to be vulnerable and open myself to the idea that maybe I was thinking about this wrong. So step one is get the person to say, okay, I got to think about this. Step two then would be, what are best practices out there? And then step three to me is, what's the simplest thing I can do now? And the simplest thing you could do right now might be just pull up a list of your members and just call them and say, hey, how's it going? What are you doing? I see you have, I mean, maybe you did a car loan for them 2 years ago and you still have the credit bureau report. And you say, hey, I see you have a credit card with US Bank. Man, why don't you, if you're going to carry a card, don't you think you should carry the credit union's card? I mean, if something goes bad, would you rather call into their call center or call me? Because I'm right here.
Yeah.
I mean, those are the easy, that's not even sales, Josh. That's just asking, how are you?
Right.
Can I help?
Yeah.
Just start easy. And then you'll have a little bit of success. And once you have a little success, it snowballs. And then you start interacting with leaders like you. We start interacting and going to conferences and seeing what's available, what's possible. Now the world looks differently. The lens that we always looked through, we've taken it off, and now we're seeing the world more cleanly.
Yeah, you're right. We could go on for this for an hour. When you're talking about even conferences, I'm thinking we need to talk you into coming back, or Joe does at least, or his booking agent needs to talk you into coming back, and we start with like, what are the 5 things that frustrate us the most about the industry? And when you said conference, I thought, man, the lack of putting value to education is a frustrating point for me too. But that's a different topic.
Josh, there's an article that I wrote and it's on CU Insight right now. And it's the 5 things a loan officer should stop doing right now.
Yeah.
I see a world where loan officers aren't keying data and pushing papers, and instead they're adding value to their borrowers and their communities at large. That's the future that I see, and we can get there together.
Yep.
Love it, Ben. Well, hey, I apprate it. I'm gonna let you off the hot seat.
Joe's
here.
back.
Yeah, I know. I'm here. I went for a coffee break. I came back. But folks, if it only took 1 or 2 things away, it sounds like we can't let built-in excuses stop us. We need to be able to embrace change and let yourself be a little bit vulnerable. But that change to achieve growth, but that change can start with just a simple phone call. We don't have to bite off the whole fintech environment in one foul swoop. That be fair?
I think that's fair, Joe. Thanks for having me, man. This was fun.
All
Thanks.
right, well,
Always appreciate it.
Thanks, Ben. Well, thanks everybody for tuning in. This has been Credit Union Joe is Disrupted with Josh.